Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Wednesday morning. I'm Prashant. With me is Nigel, and Sonia is back in full festive colors, Christmas colors, right? Christmas cheer. So
just a couple of days left for Christmas Eve, so I thought might as well.
Welcome back, Sonia.
Thank you.
You know, the market saw a big recovery yesterday, and I think that's basically the impulse, right? Buying the dips and. The dips got bought yesterday, very, in a very large way. Let me just quickly start you with the global stuff, but there's not very much. I mean, U.S. equity indices are absolutely flat, nothing at all. So the S&P and the Nasdaq are up on your screens, 4.1 point. I mean, this is as flat, almost as if they never traded last night. Yields, though, are moving higher. So, you know, Monday, U.S. 10-year was up 10. Overnight, it was up another 10. So, week so far, and we're just getting started in 2 sessions in the US. The 10-year has moved up 20 basis points. So that is something to watch out for. Maybe the market is trying to reprice its expectations of eventually where the rates in the US are going to go up to. As I said, massive recovery yesterday in India from the lows. It was almost a 200-point pullback from the low point. And it only picked up pace towards in the last 45 minutes, 2:45 onwards till about 3:30. It did very, very well. The common stock yesterday and day before was Reliance, which helped in a big way in this pullback. On the way up on the Nifty, the hurdle zone still remains around 18,435 to 18,525. And the 20-day is also kind of coincides around there, 18,549 as of yesterday's close. So you know where kind of supply and potential supply starts to come in. On the way down, yesterday's low, 18,202, 18,244. I mean, that broadly is the support zone to watch out for. Bank Nifty closed once again above the 20-day moving average. I mean, slightly above, but it's around that particular zone. So that, again, is an important level. Banks generally have been stronger. Last few sessions, that thesis was put into doubt, but let's see. Yesterday's low on the Bank Nifty at 42,955 and the 40-day exponential moving average at 42,478 are the very near-term, very short-term support levels to watch out for. It's been very volatile. It's been very all over the place with large moves, mind you, over the last 4 or 5 sessions. Very large intraday moves as well. But have we really gone anywhere after all of this action? You know, not really, right? I mean, just go back and look at where prices were 4 or 5 days back and where prices are now. After all of it, not very much in terms of actual eventual point-to-point move. So let's see if we can kind of push higher as we go into the end of the year. The SEBI is indicating about an 80-odd point higher start, 18,500 plus. Sonia, hi.
Hi, morning, Nigel.
Morning.
The SGX Nifty is roaring, right, this morning.
Yeah.
So are most of the global markets. If you look at Hong Kong, the other markets in Asia, the Dow futures are up 200 points and the Dow itself had a strong run. So all indications are that the start will be well in the green. But of course, as Prashant was pointing out, so much volatility. The good part is that FIs have bought in the cash markets after 3 days of selling. So FIs bought about 450 odd crores. In fact, both FIs and DIs bought yesterday, so about 500 crores apiece. And the Nifty had this massive recovery. Now the Nifty is also holding on to the November low of 18,030 and the 50 DMA of 18,120. The next big Q, amidst all this volatility, I think it's also year-end, so you won't get any major Q for the next maybe 1 week or so. The next big Q to watch from a local standpoint is the earnings season that kickstarts on the 12th of Jan. You have Infosys, HCL Tech that come out with their results on the 12th of Jan, followed by HDFC Bank on the 14th. And the list so far has ABB and Bosch that come out on 10th and 14th of February, but I'm sure there are plenty of others in the interim. But that's the next big cue to watch. And purely for today, of course, the market will open well in the green. But let's see, because it has been a very volatile run. There are still some headwinds from China. I mean, I was reading a headline which said that there are 1 million COVID deaths expected in 2023 because of the pandemic in China. That is definitely going to have some repercussion on global markets. So we're going to keep all that on our radar. But for today, starts in the green.
Well, that's right. You know, Sonia, Prashant, every day when I go home, we listen to Christmas carols, right? And there's this one Christmas carol. It's beginning to look a lot like Christmas, right? This time for the markets, it's not yet started looking like Christmas. But we're getting to the seasonally strong period. That's between 15th of December to 15th of January. And traditionally, the last 6-7 years, you've seen very good returns, barring 2018. Otherwise, you've had very, very good returns. So the 6-year average should come up for you between 15th of January to 15th of December to 15th of January. And the headline does well, the mid cap and the small caps do well. Let's see whether or not it'll do well, because as we speak, it's actually mildly negative from December 15 till now. So just keep that in mind. But getting back to yesterday's recap, it was a good recovery. The bulls, they wanted to defend that 18,200 odd mark. The Nifty Bank is hovering around the 20 DMA. Let's see which side it wants to break of that. And the advanced decline ratio, well, intraday it turned a little bit ugly, but by the end of it, it was almost, 1:1. So that's good news as well. The Nifty premium, we were talking about that at the start of the series. It was more than 100 points. It's come to a more realistic level of around 39 points odd. There is some rolls as well that are taking place, given that volumes will be quite light. On the Nifty Bank, yesterday, the open interest is down by close to around 10%, so there was some unwinding of positions out there. But the FIs, they added shorts, close to around 17,000 short contracts, and they unwound some longs. And now that's a big change, because they're net short on the index, which is contrast to what we saw at the start of the series. On the index option side, well, they bought some puts in case things go wrong. Well, they have some protection out there. And they wrote calls. That could be seen that maybe at higher levels, we'll see some bit of supply. Two strikes were active, 18,300 call and 18,200 put on, which brings us to the level. You have the resistance zone of around 18,450 to 18,500. 18,300 call is being written, so you add 150 rupees. That gives you that level. And since we've been seeing a bit of a fight at around that 18,200 odd, that's the level where that's a kind of a buy zone out there. The 20 to 50 DMA, that's the crucial band that we're looking at. A break beyond this level maybe will take us, but I think for the time being, we could trade in this band for a little longer. SGX Nifty suggesting a gap up, but as we've been saying that, chasing the gap up hasn't been very beneficial. So maybe wait for an intraday dip and get in. That could be a more prudent strategy.
Okay, most of the world, I think, has now gone on leave, right?
Including me tomorrow.
Ready to party, okay. And since we're talking about Christmas carols, there's one more that I really like. It's called It's the Most Wonderful Time of the Year. That is another really good one. So we're all here in Christmas and festive cheer, but lots to talk about in the next 2.5 hours. So let's begin very quickly. On the equities front, Upasana Chatra of Morgan Stanley is our guest for the day. She says domestic demand indicators show sequential moderation even as year-on-year trend remains healthy. She says domestic activity tracker has improved to 6.9% year-on-year from 4.6% in October, and the macro stability indicators show an improvement, but the risk from external factors are slowing global growth. So that's the big risk. She also says a trend in commodity prices and capital flows are key to watch in the near term.
Okay, let's get you some money market views as well. So this is Kunal Sudani of Shirin Bank, who says that the yen keeps rising across the board after Bank of Japan's surprise. He says the 10-year US Treasury yields touched their highest level this month and the yield curve remains inverted, but the distance is shrinking. He says dollar index recovery needs validation from the 10-day moving average hurdle of 104.44 to challenge the bearish chart pattern, while support comes in at the 5-week-old bearish channel's lower line, close to 102.95. For the dollar-INR pair, Kunal says consolidation may continue between 82.5 to 82.9 to the dollar levels.
Okay, and on the bonds, Ajay Magnolia of GM Financial says that the market volatility led by Bank of Japan's decision on allowing its yields to fluctuate 50 basis points above and below 0% and 25 basis points led to a spike in yields across the globe and roils of financial markets across, but it seems to be settling down. He says ahead of the RBI MPC minutes later today, traders are likely to stay on the sidelines, and he says any significant move in US yields and crude may influence yields. Expect the benchmark to trade in a narrow range of 7.27 to 7.32% today.
Okay, the Bank of Japan stunned markets yesterday with its shift upwards in its yield curve control. Basically, how much they allow the 10-year in Japan to trade up to. That's 0.5% now. PIMCO co-founder and the legendary investor Bill Gross says markets are headed for chaos if tightening of monetary policy continues. Listen.
Certainly, the economy is slowing down, and ultimately, we've got a recession. It's been bolstered. The economy has been bolstered by tremendous amounts of trillions of dollars of fiscal spending, but ultimately, when that is used up, I think we've got a mild recession, and if interest rates keep going up, we've got more than that. Well, we've got potential chaos in financial markets. I mean, today's a good example with the overnight situation with the yen and the yen, what they call the yen carry trade. I mean, lots of money have been invested on the basis of shorting the yen and buying relatively safe alternatives like treasuries or stocks. And now with the yen strengthening as opposed to weakening, and with interest rates there moving a little higher as opposed to being close to zero, then this yen carry trade stands a good chance of being reversed, and that speaks to global assets as opposed to just U.S. assets and U.S. treasuries. Treasuries today, the 10-year is up 10 basis points on the basis of the BOJ's move last night.
Arvind Sanger is now joining us, Managing Partner, Geosphere Capital Management. Arvind, great to have you with us here. Thank you very much. The Bank of Japan move yesterday shook markets, but for a few hours, right? Because then you had the Bank of Japan president who came on and said, well, this is just kind of technical in nature. This is not a reversal or an exit from easy policy. Maybe this is just one and done. We saw very large moves, but at least from the Bank of Japan and Japan itself, things not very much in terms of disruption. Your opinion, Arvind?
Well, you were just playing a clip from Bill Gross, who knows a lot more about the bond markets than I do. But I will say it just feels like, you're seeing a lot of volatility and uncertainty around global markets, right? Japan had unpredictably become, or had become quite predictable when every other central banker was tightening. Japan was refusing to tighten visibly in the last few months, in the last year, I should say. And suddenly to somewhat even slightly tighten is, in a sense, I think a big reversal from where expectations were. My view is that, look, I've been of this view for a while that I don't think we get a new bull market until we get through this phase of inflation, slowdown, recession, resolved to a meaningful extent. I'm not saying that we have to come out to all clear, but I think it's a pretty good chance that we're at least going into a mild recession in the US. Europe is already in a recession. And I think, global slowdown volatility is going to be somewhat exacerbated by a speeding up at some point in 23 by China and what that does to commodity markets. And if that feeds back into new inflation concern, time will tell. I think 23 is at least going to start out, in my opinion, to be a little rocky. But I'm hopeful that by the time we get to the second half, things will start to look a lot clearer. But in the meantime, it makes sense to be, to be a little cautious.
Okay, it makes sense to be a little cautious, and 2023 may start on a rocky note. Well, that's not exactly the Christmas cheer we were hoping for, but I guess it is what it is. Arvind, hi, good morning. Because of what's happening in China, do you see an accelerated risk of a slowdown? I mean, there were reports indicating that 60% of China could get infected in 2023. You spoke about the impact that this would have on commodities, but what do you see as the larger ramifications? And what would you do then? Would you raise cash levels now across emerging markets, including markets like India?
Well, I'm thinking that the faster China gets COVID widespread, the faster it comes on the other side. So, I know that sounds a little heartless in terms of the people who will suffer, the people who will die, all of the tragedy that'll happen for China. But it's, it's like it's going to be compressed in a few months what the rest of the world has suffered over 2.5 years. And so from a China standpoint, I think it was a, huge blunder to have kept the economy as comatose as they did through most of 22 because of zero COVID. And now that they've given up, I think they're going, an extremely fast. I think I saw some data that more than 35–40% of people in Beijing are currently or have had COVID in the last 2 or 3 weeks. So yes, it's going to be it's going to be quite rocky for the next few weeks, but it's quite likely that by the time we get to February or March, major parts of the country, certainly the big cities, Beijing, Shanghai, Guangzhou, some of these major cities may have already had their major COVID wave peak and start going the other way. So therefore, yes, for the next couple of months, things might be a little rocky, but I wouldn't worry about it too much if the lessons from the rest of the world are anything to go by, I think China is actually going to be a force for demand strength, not demand weakness during 23, even if for the next month or two, things look quite uncertain. But given the lockdowns, it may not be much worse than when they were in lockdown. In fact, mobility data in China is showing that mobility is improving, even though COVID is spreading very fast.
Hi, Arvind. Good morning. Arvind, the fear is that we're hearing very, very hawkish central banks in the last couple of weeks or so. But the good news may be we're almost at the end of this, this interest rate hike across the globe. What's your sense on that? And that sort of a backdrop, what do you do with a market like India, which has had a very, very good 2022?
I think as far as going to your original central bank question, I think central banks are trying to convince the market that even though they may be towards the end of the raising cycle, they will keep a vigilant eye on inflation. And if inflation doesn't come off as quickly and as much as they expect, they're prepared to revisit the raising cycle. So that's the message, that inflation is the focus, and it's too early to declare victory. As far as markets like India are concerned, look, India has had a great move, like you said, in 22. It's been one of the best performing major markets in the world. It's going to have a little bit of a digestion as I think markets like China, if what I see forthcoming comes, then you could see some rotation into markets like China, which have been terrible in 22. So I think in that sense, on a relative basis, India could be a bit of a laggard. But I think when I look through 23 and beyond, India I think of as one of the better positioned economy to benefit from moderating inflation, even if it doesn't go back to 2%, if it stays higher for India, which is used to higher inflation, having 4 to 5% inflation on a sustained basis is not going to be terrible. If growth starts to reappear and the earnings cycle starts to reappear, all of which we expect, and the banking loan cycle starts to take off, which it's starting to show signs of. So we're optimistic, but I would say from a market standpoint, the market is not cheap, and therefore one has to be selective and patient and buy companies. There are still good companies to be had at reasonable prices, but I wouldn't say that the market overall is positioned to be the best, one of the best performing markets in 22, but in 23, but we still find good individual stories.
Okay, good individual stories. That's my cue to take it from there. Since it is the end of the year, I don't know if I'm going to see you before, the new year again. Tell us a little bit about the top 1 or 2 trends for 2023. I mean, the big trend in 2022 was go long on banks and short on IT. What do you see as the couple of big trends for India in the next year?
Well, I would say if I were looking at big trends in India, it would be, it could be domestic consumption. It could be re-emergence of IT, which has been very much in the doldrums in the last 6 months. And I would say it could also be the domestic capex cycle. Those would be the 3 trends I'd be looking for in 23.
All right, Arvind, we'll leave it there. Thank you very much for your time. Great to speak with you. And if you don't see you again, if you don't speak again, wishing you all the best for 23 from all of us here at CNBC-TV18. Thank you.
Thank you. Happy New Year to all of you.
Same to you. Well, we'll take a quick commercial break here. We'll come back and we'll have our top stocks to track as always. Our research team will be with us and we'll get going with individual names and how they're affected by news flow. Stay with us. We're back.
Welcome back to Bazaar Morning Call, where we have, a couple of days before all the Christmas festivities kick in. And today, the bulls are going to ring in Christmas early, perhaps. The SGX Nifty up almost 80 points. Our entire research team is joining in to help us prep for the day. There are plenty of stocks to talk about. And just look at that. All of them right here in the studio. House. It is a full house. So, folks, thanks for joining in. Let's kickstart first up with Abhishek. He's... actually, first on the list, right?
It reminds me a bit of like a Marvel setting, right?
Avengers.
I think all of us will take poses.
All the Avengers and the first one. What do you want to be? I mean, Superman, Batman, take your pick. Go ahead. You're looking out for City Union today.
Well, City Union Bank, in one of the weird, update over there, we are seeing divergence still taking place. And now that's absurd given the fact that divergence was a long back gone history amongst banks. So bank has reported that a City Union Bank has reported a gross NPA divergence of nearly about 260 crores, which forms about 0.64% of the FY22 book. Now, there are many accounts over there. Some are the large ones and some are the smaller ones. Gross NPA divergence is about 20% of the FY22 slippages and more than 13% in terms of absolute value of the gross NPA that they reported in FY22. So provision divergence is a mere 40 crore over there. Now analysts say that they now expect the bank slippages to be around 300 to 320 crore as per management, while they believe, the analyst community believes, that it may be around 400 crore for Q3 FY23. So bank could miss the loan growth guidance of 15 to 18% that they have given for Q3 FY23. Provision divergence is not much. However, analysts believe that the stock can see some decline in the share price. Back to you.
All right, Abhishek, thanks very much for that. Well, commodities is what we're talking about next. Shyam Metallics, Ratnamani Metals, Venus Pipes and Tubes. Najal?
Well, Shyam Metallics, they've come out with another acquisition. They've done a couple of smaller ones in the past year and a half or so. And this is yet another one. So they'll be adding close to 1.5 lakh tons of stainless steel, wire rod and bar mill capacity. They've gone ahead and acquired Mittal Corporate Limited. Now, ferroalloys, remember, is what they, as it is, manufacture. So that will be an input for the acquired unit. So on the whole, they see it as integration and a bit of diversification as well that they're looking at. The company in the past has been saying that their total capacity, production capacity from around 8 million tons, they're looking at it going to around 15 million tons. So this takes them a little bit in that direction, though it's very small, 0.15 million tons odd. Capex that they've lined out is close to around 10,000 crores odd. And they're looking to achieve all of this via organic and inorganic growth. But they're saying that the growth will be funded by internal accrual. So I'll read this positively. Oh, we already moved to the next piece of news as well. So let's address that then. Stainless steel tubes and pipes. Well, there was a recommendation that had come in the month of September. Now the Ministry of Finance has gone ahead and accepted this anti-dumping duty. Stainless steel tubes and pipes, it's a large portion of it meets a large portion of domestic demand, the imports that is. So the recommendation has been accepted. We'll have to see the magnitude, but it's been recommended for the next 5 years or so. So two big beneficiaries out there, that's Ratnamani Metals as well as Venus Pipes, because they make stainless steel pipes. I don't think you should look at the others, and Jindal Saw as well, they have a small portion out there. So positive for all these three stocks, that's Shyam Metallics because of the acquisition, and Venus Pipes as well as Ratnamani Metals.
Okay, I'm also going with positive for Uno Minda this morning. There's an update that the company has given where they've entered into a licensing agreement with a company in Korea called Dixon Tech. Now, this is in order to strengthen their automotive sensors portfolio. They will be designing, developing and marketing wheel speed sensors in India. And now with a lot of the new SUVs coming out, these wheel speed sensors have picked up pace in terms of demand. Dixon Tech is actually a leading supplier to OEMs in Korea as well as in the international market. And Uno Minda had a couple of years ago set up a separate division for automotive sensors. Now, it's back in focus. They've signed up this license agreement because of the rising demand of evolving technology in the sensor space. Now, remember, the stock has not done anything for investors this year. It's down 12% in 2022 so far. But Uno Minda is doing a lot in the space of electric vehicles, and there's an expectation that their earnings will grow exponentially in the next couple of years. So perhaps that's why the stock is in focus. But the performance this year has been quite lackluster. Today, though, I'm going with green on this stock. Okay, all right. Let's get in Vahistha. Then Vahistha, you're tracking Dixon Technologies as well as Jubilant FoodWorks. We're getting the pizza, I believe, in 20 minutes. Are you treating us?
Well, only maybe on a Friday then. Let me start with Dixon Technologies, wherein the company has received incentives of approximately 58 crores for the mobile manufacturing for the quarter of Jan to March 2022. Remember, the last time we had interacted with the management, they had mentioned that the mobile industry is not growing as expected, and also there could be a degrowth in this year. Also, there was another piece of news in the same space, which is on Foxconn India, which has been issued incentives of 357 crores for the period ending August 21 all the way to March 22. Which is based on the incremental investments and sales figures. And the next stock is Jubilant FoodWorks, wherein Domino's has launched 20 minutes delivery in 20 zones across 14 cities in India, and the brand had earlier achieved, as we know, 30 minutes of delivery and established itself as amongst the leaders in the QSR category.
Okay, I don't understand this though. If you can wait 30 minutes,
20
you can wait. Yeah. If you can wait 20 minutes, you can wait 30 minutes, right? I mean, I don't understand the difference. Why is this making news?
But what are the pizzas coming, Nigel?
Yeah.
What?
Why is that? I'm on a low budget.
Pizza's coming in 20
You know, I'd
minutes.
rather wait 30 minutes and let them cook that pizza properly than, you know, hurry it up and reach me in 20 minutes. But okay, we're waiting for that one, Vaishta. But let's go across to Vivek. He's standing by patiently. Vivek, you're looking at Sterling and Wilson, and you're also tracking Dabur this morning?
That's right. So Sterling and Wilson, very healthy subscription figures coming in as far as the OFS is concerned. And, both of the promoter entities who are looking to pay stake via the OFS, remember this was mainly done in order to adhere to the MPS norms of SEBI, which is the minimum public shareholding. So both of the promoters have decided to partially, upsize the option or partially take fact of the fact that given the fact that Shapoorji Pallonji OFS is now at 3.08% versus the earlier 3.69% that they had indicated earlier, and Khurshid Darwala will now do the OFS of 1.32% versus the earlier 1.58%. The other stock that we are looking at is Dabur, largely along the lines of what we had indicated in yesterday's trading session. Two promoter enterprises, Gyan Enterprises and Chaudhary Associates, sold almost 1% stake in the company, and the entities are major shareholders of Dabur. And like our colleague Nigel Mangalam had indicated, this is mainly to fund some ventures in the private hands of the Berman family.
That'll be interesting to see, where they go ahead and put this money. Yesterday, at least, if you saw, there are two listed companies. That's Eveready in the last hour of trade went up, and Religare as well. So interesting, where do they put that money? For now, we have no clarity as to where, but we know that these are held by the family itself. The intraday chart of Eveready, if you see it, it recovered substantially from the low point of the day. So let's see whether or not there is some action on the listed entities or whether or not they go ahead and put some money on the unlisted entities. But thanks, guys, for joining in. Well, let's do a quick recap then of all the stocks that we just covered. Stocks with positive news flow include Shyam Metallics and Energy, Ratnamani Metals, Venus Pipes and Tubes, Uno Minda, Dixon Technologies, Jubilant Foodworks, Sterling and Wilson Renewable, and Dabur. While stocks with negative news flow, they include City Union Bank and Piramal Enterprises.
Okay, that's the list of stocks that you should watch out for today. But Manisha Gupta is joining us to tell us how the commodity market has been shaping up so far. Manisha, hi, good morning. What are you watching?
Morning, Sonia. Well, I'm looking at the crude and the metal prices. Japan tweaking its ultra-loose policy for the first time in decades clearly has led to yen gaining up, and the dollar index continues to trade at a 6-month low, and that has been supportive for commodities across. The crude oil prices, for one, are back above, holding $80 a barrel. That is because the U.S. crude inventories have declined by a big margin than what the street was expecting. And then the Russian seaborne crude shipments also have declined post the G7 sanctions. Keystone Pipeline, the partial resumption has begun, but the full operation will only begin in next week, and that has added premium to prices. And then the U.S. is also looking to refill its petroleum reserve, which, by the way, is at around 38-year lows, is supporting the crude oil prices. In the metal space, gold and silver gained up by 2%. You have metal prices all up between 1 to 3% as well. So the weakness in U.S. dollar clearly a supportive factor.
Okay, Manisha, thanks for that. Let's take a quick break. On the other side of the break, Deven Choksey of KR Choksey will be with us for some stock talk. Also, Atul Lal of Dixon Technology will join in to discuss the PLI approval of over 400 crore rupees for mobile manufacturing to Foxconn India as well as Dixon's subsidiary Paget Electronics. More on that in a bit.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, for starters, the SGX is suggesting that we could have a green morning. 70 to around 80 point bump up is what we could see. But just keep in mind that yesterday from the day's low, we recovered substantially, close to around 140, 150 points or thereabouts. But let's discuss a couple of stocks. We have Deven Choksey, who joins us of KR Choksey. Good morning, Deven. Thanks so much for joining in. Well, Deven, let's address a couple of stocks, though the SGX is suggesting that we're going to open up in the green. Just a couple of them, as per news flow, should start in the red. That's City Union Bank, one of them. They released a report late last evening, and they said that, in fact, there's going to be some divergence, which is a little bit of a worry. What's your view on the stock or on the banking space?
So, good morning, Nigel. In general, I think the banking space to me looks, I think, extremely convincing. And within that, I think the corporate banks and the strong NBFCs, which are retail focused, housing finance focused, I think are the ones which looks, I think, very convincing to me. I'm less convinced about the prospects of the public sector banks, though they are available at a valuation which are comparatively cheap. But the fact remains that I think the growth engine is still lying with, I think, the other stronger entities which are there in the universe. So from that perspective, either you look at the corporate lending growth, you look at the retail lending growth, or you look at, I think, housing finance lending growth. I think some of these areas where probably we are seeing 18 to 20% kind of a growth happening. Uh, the beneficiaries would be the banks which have got the ability to reach out to the customers effectively. Beneficiaries would be the banks which are having the loan book to offer to the customers, or the size of the loan book to offer to the customers. So I think the focus would remain with the larger banks. Focus would remain with the banks which have got technology in the front end and also in the back end to process loans. I think this is where I think we would probably remain more focused vis-a-vis the smaller banks at this point of time.
Deven, last 2 days, when the market has pulled back from the lows strongly, one common theme has been Reliance. It's also, by the way, I was looking at some charts. Technically, also, it's interestingly poised. Your thoughts, Deven? RIL, near-term catalysts, if any, and how do you see it play out?
Yeah, Prashant, good morning. Well, I believe that I think in case of Reliance, the fundamentals are always intact. And in my viewpoint, I think each of the verticals, the consumer-facing verticals in Geo as well as in retail, and the industrial verticals in form of the refining business and the petrochemical polymer business. Each of these verticals have, I think, indeed a great amount of growth to offer. Whatever little negatives, I think, due to the crude oil prices were there in the second quarter, I think the third quarter has been by and large extremely positive. So one is expecting a steady set of margin both in the petrochemical polymer segment as well as I think in the refining segment in this particular quarter, which is a large chunk of business, close to around 55% contribution comes out of these two verticals. And the other two verticals, the Geo platform and the retail platform particularly, I think both of them are offering a great amount of traction from growth point of view. In fact, I think in case of Geo, the realization per customer, I think, is definitely improving, and that is what is going to contribute significantly to the growth in this particular quarter, as well as end of the year in the next quarter. So I think any correction in the stock price because of any technical reason which Reliance has experienced, I always becomes a buy opportunity. And in my viewpoint, I think the stock is ready to go to the levels of 3,200, 3,300 in a couple of quarters from now. So that is where I think one could keep an eye on from investing perspective.
Wow, that's a big upside. 32 to 3,300 is your expectation on Reliance over the next couple of quarters. It's at 2,600 right now. So that's perhaps one of the big stocks you're betting on in the new year. But Deven, just stay on. We'll come back to you in a bit. Another stock we want to talk about is Dixon Technology. Now, the Empowered Committee for the Performance-Linked Incentive Schemes for Large-Scale Electronic Manufacturing has approved incentives amounting to 410 crores for mobile manufacturing to Foxconn India and to Paget Electronics, which is a subsidiary of Dixon Technology. To find out more, we speak to Atul Lal, the MD at Dixon Technology. Atul, thanks a lot for joining in. Good morning and greetings of the season to you and your entire team at Dixon. Can you tell us a little bit about this PLI approval that has come through for Foxconn and for Paget? What does this mean for you in terms of incremental business? The last time we spoke with you, you were a bit circumspect, a bit cautious about the mobile manufacturing business itself. You were talking about a growth slowdown. So can you tell us what the way forward would look like post this PLI approval?
So I think it's a very, very significant positive. This is the second approval we have got. The first cash inflow has already happened. And this is for January to March quarter. There was, as I had shared last time, there was certain level of skepticism on disbursement under the PLI scheme. I think that has been overcome. And this definitely adds to the competitive edge that India is already building in mobile phones. In our case, in the current year as well, we have already achieved the thresholds both for CAPEX and the incremental revenue prescribed under the PLI scheme by the government. And the applications up to September quarter for the current fiscal have been submitted. As far as the business is concerned, we are almost on the verge of closure of a couple of large contracts in mobiles, which is going to be both for domestic markets and the global markets. However, as far as the demand is concerned in the current quarter, post-Diwali, in mobiles has been slightly muted.
Okay, all right. Good morning, Mr. Lal. Well, good to hear that you have achieved all the, the revenues as well as the capex with regard to this scheme for FY23. For FY24, if you could highlight, what are the targets out there in terms of capex that you have to put down and revenues as well, so we get a sense about, what's the target for the next year?
So as far as capex is concerned, under the PLI guidelines, we were supposed to make a capex of 200 crores over a period of 4 years. That's up to 24-25.
Okay.
But we incurred that capex in the very first year. So capex threshold is already achieved.
Okay.
As far as the revenue threshold is concerned, the upper ceiling is 6,000 crores for the next financial year. And we feel that we are going to cross it by miles.
That is FY 24?
FY 24.
Okay, and you're saying you'll cross that by miles, by some distance, right?
Significant.
Okay. Mr. Lal, you have briefly alluded to that weakness in mobile phone sales. Can you talk a little bit more about that? I mean, how is that kind of panning out, and what's the forecast? How much is that as a percentage of your business?
So post-Diwali, demand has been muted. It has been slow, both in the global markets and the Indian market. Our revenue contribution from mobile in the current fiscal is going to be around 4,000 to 4,500 crores, which would be approximately somewhere between 28 to 30% of our overall revenues.
Okay, 4 to 4.
Just one more thing, Mr. Lal. 28 to 30% of overall revenues. Why do you think there is this lull? Does it kind of tie in with overall sort of broad-based weakness in the lower end of the economy, as many companies have told us? Even otherwise, I mean, consumer durable sales. Could you give us a picture? How are sales doing, and what's your own prognosis? What kind of work are you getting from companies, and just an overall sense?
Demand has been muted. It has been some kind of a mixed bag across various product categories in consumer durables. There is that muteness in the categories of mobiles, IT products, LED televisions. However, in the categories of washing machines, telecom devices, and lately I also find demand to a certain extent in lighting recovery. So it's been some kind of a mixed thing, but overall there is a muteness.
So you said that you're expecting revenues of 4 to 4,500 crores in the mobile business this year. Earlier you had spoken about 4,500 to 5,000 crores. So is it fair to assume that you're scaling down your guidance?
There is a bit of scaling down.
Okay, so this is important. You're scaling down your guidance in the mobile business. Would you also want to tell us what this means for your operating performance? Because you're sitting at about 50 crores of operating profits in the quarter gone by. Do you think there would be more pressure, just for mobile business I'm talking about, would there be more pressure in the second half?
So the current quarter, there would be some pressure. But in the quarter 4, we see a significant increase in the order book, and we'll see a major recovery in Q4.
Okay, all right, Mr. Lal, last year I think you did around 2,800 crores in mobile business, which goes to around 4,500 crores in this year. For the next year, what kind of a number you're looking at on the mobile division itself? What kind of a growth? Because the street is banking on that.
So for us, mobile is going to be a significant trigger for growth.
Yes. Could you quantify it, sir?
I feel that we should double it almost.
In the next year. So next year you'll do around 9,000 crores.
That's right.
Okay, all right. And what does this mean in terms of overall margins for the company? I think for this year, you're guiding margins of around 3.8% odd. That's for the entire entity. For the next, how do you see this shaping up?
So margin profile would be somewhere in the range of around 4 to 4.5%.
For FY24?
That's right.
Okay. So this 9,000 crores is for the mobile business that you spoke about for next year, right? and 4 to 4,500 crores for this year. Just trying to understand if the situation in China gets worse, which I guess, going by the headlines it could, would that put this revenue at risk for you?
So in short term, there may be some risk on account of supply chain challenges. But on an overall basis, it gives us a significant opportunity because the China plus one thesis gets activated even more.
Sorry, just a couple of more things. Where is the doubling, Mr. Lal, going to come from? I mean, is there a new line coming up? Sorry, just a basic question. Expanded capacity? Yeah.
We are at almost final stages of concluding a couple of large contracts.
Okay.
Hopefully, we should be announcing sometime next month.
Okay.
And this additional business is going to be generating this revenue for us in mobiles. And for that, some investments have already been made in our new Noida factory, and some more would be incurred.
Okay. You will announce these maybe next month, you said?
Hopefully.
And this is where bulk of this is going to come from. You said, when we last spoke, you'd said top line this year could be between 14 and 15,000 crores. Is there any change to that as well this year, FY23?
We still maintain that we're going to be somewhere around that.
Okay. All right. Mr. Lal, since we're talking a lot about the mobile division, which goes to 9,000 crores odd, and you've indicated you've already made some capex and investments, at peak levels, the mobile division with the investments that you've made, what can it contribute?
So mobile division, the next day we're targeting somewhere between 8,500 to 9,000 crores.
Yes.
And the mobile itself would keep growing at around 25 to 30%.
And for that, you've already made capex. You've already done the capex is already done.
Certain balancing capex is going to be made, but largely the capacities have been created.
And you can grow by 20-25% in the mobile division from that base of around 8,500 crores for the next 2 years at least, or more?
That's right, for 2 years.
2 years.
Okay. I just had one more question. You said that there is a near-term risk to your guidance because of the supply side issues in China. Are you already seeing some supply constraints because of the pandemic situation in China?
So not as yet. We are keeping the China situation under lens.
Okay.
So we have not had any delivery issues till now. But in case, as the experts are predicting, that the pandemic situation in China is going to worsen, that might impact. But as of now, we have not been impacted at all.
Okay. All right. We'll leave it at that. All the best and thanks a lot for joining in. That is Dixon Technology. Important information. They're scaling down their guidance for the mobile business because of the muted sales and the demand situation. So earlier they had guided for 4,500 to 5,000 crores mobile revenues, and now they're scaling it down to 4 to 4,500 crores. Deven Choksey is still with us. Deven, the stock is at a little over 4,000 rupees. Is the risk reward unfavorable for investors? Would you be cautious after what you heard from the management?
So I think few things which one can take a look, I think, from the commentary of the management. One, obviously, I think, is the capex program almost done, I think, ahead of schedule. Second, some of the large contracts are rolling out, I think, and that is happening in the near quarter, I think, as well. So from a perspective of looking at the growth, I think the growth engine continues, save except, I think, 1 quarter of, I think, fall in the business, I think, which might probably affect them to a certain extent. However, having said that, I think the company is already basically valued, and I think most of the good news is definitely, I think, priced in as far as, I think, the valuation is concerned. Should this engine continues with producing 25-30% kind of a growth, which the management commentary states, I would think that, I think, any correction in the price would be a meaningful entry into this particular stock. The fundamentals on 1 quarter basis, I think, are not getting changed beyond the point, but I think the larger picture remains intact. So correction in the price would be a welcome opportunity to add into the portfolio, this particular company.
Okay, no, got that. Just a few other names your way, and this is basically just trying to understand if there are more, there's more here. So, look at stuff like PNB Housing. We saw a big move yesterday. Some of these smaller railway stocks moved again, IRFC, RVNL. Fertilizer, although there was a pullback yesterday in some names, but names like Fact were limit up. That's smaller fertilizer name. Anything hit the sweet spot, Deven, for you?
So, Prashant, I think housing finance per se, I think as a business, I think remains extremely favorable as far as I think our portfolios are concerned. And we believe that I think this engine, which is producing growth of around 20% kind of a lending growth for the lenders, housing finance companies, is definitely, I think, continuing for next, I think, 22 to 3 years as the visibility is available. So in my viewpoint, I think if the companies are getting doubled in the book size in around 3.5 to 4 years' time, with this kind of growth rate that they are producing, the housing finance business should remain relatively safe as far as investment portfolios are concerned. And they are probably, I think, better compared to the pure play real estate and the construction companies, largely because of the fact that the growth rate is assuming the steady pace as far as I think the outlook is concerned for next 2 to 3 years. So we remain bullish on housing finance companies on selective basis.
Okay. The other stock I wanted to check with you about before we take, we need to take a break, sorry. Deven, thank you on that note. Thanks a lot for joining in. We'll take a quick break. Up next, we'll be joined by Mitesh Thakkar and Sudarshan Sukhani for some technical trades. And in just about 10 minutes from now, we'll have the pre-opening rates kicking in. Stay tuned.
Okay, welcome back. You're with us here on Bazaar Morning Call. 9 minutes to go for the pre-open session. Sudarshan Sukhani, Mitesh Thakkar are with us. Gentlemen, good morning. Great to have both of you back with us as every morning. What a pullback yesterday, Sudarshan. I mean, 200 points by the end of it from the lows, from 18,200, which was the low yesterday. What's your sense? I mean, more to go here?
Yeah, good morning, Prashant. My sense is that we had a correction, and that correction has found support at lower levels repeatedly on Monday, then yesterday on Tuesday, and we have seen a bounce back. I would be a buyer today in the Nifty, which means after the open, just give a few minutes for the markets to become stable and go long. There's no need to wait for a dip or a breakout or anything else. Just stay long. Your stops should be about 100 points from your entry price, and I hope the stops won't be triggered. So we'll take the long position home if the market is closing strong, and tomorrow we'll see what happens. That applies to the Bank Nifty also, although the Nifty is the preferred choice today.
Okay, Nifty is the preferred choice. Mitesh Thakkar is also with us. Mitesh, hi, good morning. Some of the key levels are holding on the downside, whether it's the 20, the 50-day moving average, even the lows from November are holding. Do you think that will be the order of the day, that even if we do get volatility, the market will at least hold on to that 18,200 mark? And what should the strategy be purely for today?
Good morning. So, day before yesterday, we kind of advised shorting at higher levels, and that was a good trade. Yesterday, it did get stopped out with the market rebounding. But the overall texture is slightly become confusing for me. I think we would get positive once we start getting past 18,450, 470, or would look to explore lower levels to buy into. So for the timing, I think I'm slightly in a wait and watch kind of a mode. The key here could be the behavior of the Bank Nifty. I think if the Bank Nifty does not break below 43,000 to about 42,900 levels, then I think the market will consolidate and then eventually move up. But in case the Bank Nifty starts breaking below these support levels, and yesterday we were very close to those levels, then I think we'll get into a corrective mode. So as of now, I think maybe a day or two I will want to hold my horses and then take a trade.
Okay, all right. Thanks for that, Mitesh. But go ahead and tell us your stock picks for the day.
On the stock side, Nigel, good morning. I have a mix of buys and sell calls. I have a buy on Apollo Tyres with a stop at 322, targets of 340 here. Reliance had a good move yesterday. That's a buy with a stop at 25.90 for targets of 26.80. While on the sell side is UPL, if it breaks yesterday's low, which is 749, sell with a stop at 760 for targets of 725. And SBI Life on a mild bounce back around 1235 is a sell. Keep a stop about 1251. Look for targets of 1205 to about 1200.
And Sudarshan, how about you?
Well, Canara Bank is a buy. After that big rally in PSU banks, Can Bank has been consolidating for almost 2 months. It now gives a sense it's willing to break on the upside. That's a buying opportunity with a stop under 3112. Cummins is a buy, same story, big rally, very small correction, so it's an outperformer. That's a buying opportunity with a stop under 1450. GNFC is my only intraday short. It's a short because the stock has been falling. It's in a mini bear market, even when the Nifty was rising. Keep a stop above 577. And HDFC, that big one, housing finance, that's a buy. Again, a consolidation for 1.5 months. We assume this will break on the upside. Buy with a stop under 26.75.
Okay, thanks for that. We'll keep coming back to you for more. Do stay on. In the meantime, market regulator SEBI, after its board meeting yesterday, made some crucial announcements, including changes in the buyback regulations and the investment in mutual funds. Yash is here to tell us about the latest announcements. Yash, morning.
Well, morning, Sonia. So, of course, SEBI's board meeting threw up some very important amendments around the buyback regulations. One important statement which came from the board meeting was that the market regulator intends to phase out buyback through open market or exchange route entirely by April 2025. But in the meantime, regulations on the open market buyback route have been made more stringent, just like increasing the utilization amount earmarked for buyback, taking it to 75% from the current 50%. But SEBI's made it clear that the preferred route for buyback should be tender route, and hence relaxations have come on this side. SEBI's permitted an upward revision in the buyback price till 1 day prior to the record date. So that's going to be important. They've also removed the requirement for filing a draft letter with market regulator SEBI for such a buyback. There are more relaxations which are in discussion with Ministry of Corporate Affairs, and they are also expected to come in some time. The first one is increasing the maximum limit of buyback to 40% of the paid-up capital or free reserves of the company from the current 25%, also allowing net debt-free companies to do 2 buybacks in a single financial year. Apart from that, in interaction with market regulator SEBI chairperson, she said that on delay of the IPOs, she said SEBI can't be blamed for delay in IPOs once the DRHP has been filed. Merchant bankers have been repeat offenders a lot of times when it comes to giving the right documents to SEBI. And now on, what will happen is that they will return those documents back to the merchant bankers if those documents are not submitted with them in the appropriate time period.
Okay, all right, Yash, thank you very much for that. We'll take a quick commercial break here. We'll come back with a pre-open, but also we'll have Vasudev of ICICI Securities to talk about the demand trends in the auto space, two-wheelers and four-wheelers. How are things looking? That conversation with Vasudev Banerjee of ICICI coming up in just a bit.